So, Jorge, thank you for being here. Could you introduce yourself to the audience?
Yes, Jasper. I'm Jorge Ganoza. I'm a president, chief executive officer, and co-founder of Fortuna Silver Mines 20 years ago.
So, could you summarize the second quarter in your own words?
Our second quarter was another quarter of strong operational performance. We delivered gold equivalent ounces, 116,000, compared to 112,000 in Q1. Our consolidated cash cost per gold equivalent ounce was under $1,000 at $988, and our AISC for the period was on a gold equivalent basis 1,656. Was a bit elevated compared to the previous quarter, and again, it's on the back of or large sustaining capital projects, particularly at the Lindero mine this year, where we're completing a leach pad expansion. It's a $42 million project this year, which will serve the mine for a decade. That project alone weighs about $90 to $100 in our consolidated AISC. So if we adjust for that, if we adjust for the San Jose mine, which is on our last year of production, or AISC hovers around $1,400. Right?
Now, more than half of the year has passed. Two quarters also passed, but you have had 2 months since then. So, how comfortable are you that Fortuna would meet guidance of 457 to 497,000 ounces of gold equivalent, and also reach guidance, which is between $1,500 to $1,640 per ounce?
Very comfortable. We are, very much aligned with guidance for the year. We don't see, even though we had some issues to contend with in the second quarter, power issues in West Africa, in Burkina Faso, impacting our Yaramoko mine, and also power issues in Cote d'Ivoire, impacting our Seguela mine. Our local teams were able to contend with those and manage to deliver the ounces within a range of guidance. So our guidance for the year is still looking very good. We're very comfortable with achieving the objectives we set out. Also, bear in mind, you asked at the beginning of our financial performance. I want to highlight as well, robust sales on the back of those 116,000 ounces gold equivalents produced of $260 million for the quarter, with mine operating income of around $80 million, right? We reported attributable net income of $40 million or 13 cents per share. Our adjusted EBITDA was about $113 million, and our net cash provided by operating activities came in at a strong $73. Our free cash flow from ongoing operations, that's after meeting sustaining capital and corporate expenses and all of that good stuff, was about $39 million, right? So in the second quarter, the company had strong performance.
So Fortuna had 17.6 million in non-sustaining Capex this quarter. What is that made up of?
Basically our investments in Greenfield Explorations across the portfolio. We have the Diamba Sud investments, where we are been drilling aggressively, advancing studies. We are preparing to do drilling as well at our Tongon North property in Cote d'Ivoire, in the north of Cote d'Ivoire, an exciting exploration opportunity we have developed. We're also getting advancing work at our Cecilia project in northern Mexico, in the state of Sonora. So, basically exploration, business development initiatives across the portfolio make up the bulk of the $17 million in non-sustained.
So G&A has gone up, not just because of Seguela. Could you add some color to this? And what is the expected average quarterly G&A going forward?
We do a very good breakdown of our G&A expenses in the in all our disclosures, right? So in the quarter, our corporate G&A was $6.6 million, which is 8% lower than what we had a year ago, right? In the second quarter for 2023. So we have higher mine G&A because we just included the Seguela mine in contribution to G&A, no, or demands on G&A, right? So and also we have share-based payments, which are higher compared to a year ago, and that is just the result of an increase in share price and how we value the long-term incentives in share-based payments, right? So what we should fix on is, for example, our corporate G&A. How are we tracking with that? We do about $6.5 million per quarter, and as I said, the 6.6 million in Q2 is lower than what we had a year ago, which was 7.2.
So Seguela, the power issues that Seguela and also Yaramoko had or have had, or have they, or really they have been related to Côte d'Ivoire and Burkina Faso as a whole? Have they all been resolved?
Yes. The problems in Côte d'Ivoire had to do with two power stations coming out of service for unrelated reasons at the same time. But I can advance to you that already in the month of July, August, which is coming to an end, we already had a stable power from the grid, right, at Seguela. So the problems we saw in the second quarter were constrained to the second quarter. And at Seguela, we managed we managed the issue of power shortage, pulling two levers that we have at this one mine. One, we were able to press production at higher throughput for the hours we had power. We lost about 19 days of production in the quarter, an aggregate of 19 days of production in the quarter due to power shortages. No, if we aggregate all the lost times lost hours throughout the quarter, it amounts to about 19 days. But we were able to run the mill at higher throughput when we had power. And also we were able to feed the mill higher grade compared to what was in our plan. For example, in the second quarter, we fed the mill a head grade of 3.5 grams of gold per ton. That compared to, for example, 1.5 grams a year ago, right, in the second quarter of 2023. So, higher throughputs, higher grades. The management team at Seguela did an excellent job being able to pull those levers that we have in the business. And, our production came in at about 33,000 ounces. So within guidance range. And at Yaramoko, we have, although there were power shortages, we have a backup power to run the full operation, which we do not have at Seguela. At Seguela, we only have backup power for critical processes. We cannot run the entire mill. In Yaramoko, we do. We can run the entire mill with the backup power, and we did. So, but I'm also, I can report that in the third quarter, those power issues have been largely resolved, and we're getting stable power from the grid, both in Burkina Faso at Yaramoko and in Côte d'Ivoire at Seguela.
So the impact on production in Q3 has been minimal.
Minimum. We are at both mines well within guidance range.
Excellent. And could you give us an update regarding Seguela on the work, mining, etc., planning that you will be performing in the second half of this year?
Yeah, we are currently working on 3 ore bodies: Antena, Ancien, and Kula. The bulk of production is still coming from the Antena pit, which is the anchor for production over the next few years. And we've been guiding with transparently how the mine is going to move in terms of strip ratio and those things that are cost drivers. Our AISC is still very competitive, and our cash cost per ounce at $560 in the second quarter is very competitive. So, we are comfortable with the operation. We see no surprises. The mine is tracking well, again, with a very competitive cash cost around $560 and a very competitive AISC that travels under $1,100 right now. Right? So, and again, we see no surprises, steady as it goes. And our focus at this mine is to try to capture still opportunities that we see in the design and get that throughput higher, right? But let me tell you what's exciting about Seguela. What's exciting about Seguela is the discovery of the Kingfisher deposit. That is something that I believe the market still doesn't quite understand. We have had 2 news releases on Kingfisher up to now, and we are quite excited here in the team with how Kingfisher is evolving. We have outlined mineralization for a strike length of about 2 kilometers with significant widths, significant grades, and mineralization remains open at depth and along strike. So watch out for how Kingfisher evolves. We in the team are quite excited about it.
So thank you for being here today, Paul. Could you introduce yourself to the viewers?
Yes, a pleasure to be here as well, Jesper. My name is Paul Whedon. I'm the Senior Vice President of Exploration for Fortuna.
Perfect. And so let's speak about what's probably the most eventful this quarter in terms of exploration, the Kingfisher discovery. It's a blind discovery with us. There's no surface exploration. How did you find it?
Yeah, you're right. It is a blind discovery for us. Kingfisher was found through a combination of things. We've got a pretty good structural model that we use for exploration at Seguela. The Kingfisher deposit sat nicely on that model. It's essentially a right-hand bend in one of the major structures. The area is covered in surface material. It's about a metre and a half deep. That is not mineralised at all. There's no artisanal workings on this whatsoever. So, yeah, we use the structural data based off the aeromagnetic work we did 3 years ago, and then followed that through with some deep geochemistry, some auger work, and that led to the geochem anomaly. And that was it. Then we put in some RC holes, and the rest is history.
And the geochemical anomaly, what was the soil sampling that led you to that?
Yeah, we knew that the corridor was likely to be fertile. The same corridor also hosts Agouti and Boulder to the north, a kilometre and a half and roughly 3 kilometres north. So we knew we were in, if the model held true, we knew we were in a favourable zone. The challenge was to look through the metre or so of cover on top, and it's a fairly straightforward process for us at Seguela, where we take the auger rigs and just do auger drilling through the surface cover till we get to the recognised horizons that are below that. And that's exactly what we did with this one. And we generated a 2+ kilometre long soil anomaly.
Could you explain the geometry of Kingfisher based on what you know so far?
Mm-hmm. Yeah, it's pretty consistent with everything else we've seen. So essentially, it's north-south striking. It's got a fairly steep dip, near vertical dip at this stage. It does drift around that axis a little bit because of the curvature of the kink in the shear zone. But we're consistently seeing 20 to 25 metre wide zones of mineralisation, 2 to 3 common sets of quartz veining hosting the gold mineralisation. Shallow, we haven't drilled to the bottom of it yet. The deepest drilling is about 120 vertical metres. So it's still wide open at depth. And we've now got RC drilling for 1.9 kilometres of strike length now. So it's shaping up to be a fairly decent sized deposit.
What do you expect the average grade to be?
Very early days. It's a bit of a prediction here, I suppose. But I'd be expecting somewhere between the 1.9, 2.2, 2.3 gram range.
Perfect. So in other words, it's it looks like Kingfisher will be your largest deposit. Is that a fair statement?
It will be certainly up there. Antana is our biggest deposit, and so the challenge will be to see if we can get something more than 500,000 ounces. And given the numbers that we've seen so far, and if you take the dimensions, you will certainly get somewhere in that order.
In what directions is mineralization still open?
It's still open along strike to the south, and it's still open, very much open at depth. The majority of the drilling is less than 150 meters, so it's wide open. So the northern chute and the central chute have merged together, and we're just drilling off the gaps now as we speak between the what was the central chute and the southern chute. So when they all come together, we'll be at 1.9 kilometers.
But so in other words, strike length is more or less defined. You don't think that could exceed 2 kilometer, 1.9 kilometer?
I'm not going to rule that out. I think that we are on a very favourable horizon. We may not see the deposit itself get much longer in terms of strike length, but you've got to bear in mind we have not done any work further south on this same structure. So it's entirely possible there's another one of these repeats further south on the same structure.
I mean, you're looking to put out an inferred resource early next year. Do you expect to by then have a good handle on the extent of the resource?
Yes, 100%. The drilling at the moment, we've got 2 rigs on there at the moment. We've had 2 rigs on there since pretty much the beginning of the year. The guys, the team there with Frank and his guys have got a very good handle on the geometry. They've got a very good handle on the methodologies and how we explore it. So I'd be very confident that we'll continue to grow that deposit as well as converting it. Next year's objective will be to convert it through to reserve.
And what's the plan after with regards to infill drilling and actually bring it into the mine plan?
Yeah, that's all scheduled for next year. So the program at the moment through to about November is essentially just keep framing the ore body, so understanding where it is and bringing it through to inferred drill status. As soon as we reach that, we'll go back over, start the infill drilling, which will be late this year, sort of December or thereabouts. And that program will then run deep into next year while we bring through the reserve, mine design, geotech, etc., and where does it fit in the mine plan. So it's a fairly rinse, wash, repeat type approach that we have there. And this is just another one. It's just a bit bigger than the other ones.
Could you summarize what you've learned on Badior and Ancien, which you put out drill results on in June?
Yeah, so Badior's relatively small, but relatively high grade. So fairly discrete. It's an anomaly that we found. Actually, it was an anomaly that was blended in an old historic Newcrest anomaly that they hadn't put much credibility in. They felt it was a big transported anomaly. We did some work 18 months, 2 years ago, some infill auger work, and to help better define what was actually in there and find the source of the anomalism. And what we ended up seeing was that it was a very broad anomaly, resolving itself into 2 separate deposits. One is Barana, which we're still drilling, and the other is Badior. And Badior was about 700 meters away from the main line of mineralization. It's a little bit different. It's orientated more north-northeast, whereas everything else we've got on site is more north-south. It's a high-grade northwest. It's a high-grade quartz vein, a lot of visible gold in it. It's a fairly defined structure. We've drilled along strike. There's nothing else at the moment. But yeah, sweet little deposit. It'll generate some good ounces out of that one. And Ancien, what we're chasing now is the depth extensions. We're looking at the underground potential across the entire site. Several of the deposits we've drilled off so far remain open at depth, and Ancien is one of those. So that's been the process of understanding where that runs to, hence doing the drilling earlier on this year. So we'll have an updated inferred resource on that for the release early next year.
What's very important for investors to determine, I mean, are you replacing or adding more quality ounces than you're depleting? And you only, so all other companies, you only report MRE once every year. So could you give us an update? Are you saying that, would you say that you're replacing, or would you say that you're sort of adding more ounces than you're depleting?
Bit of a dangerous area to postulate here. We haven't finished the work off. But no, look, the objective for the exploration team is always to grow the mine life. That's it, pure and simple. What we'll see with Kingfisher when we convert Kingfisher to reserve, that will be substantial. We're also pushing hard now on the potential underground, and that will be Ancien, Sunbird, they're the main two, possibly Cooler. So they'll add more ounces in. So I think you'll see Seguela maintain a minimum 10-year mine life going forwards for quite a number of years. Bearing in mind we've done very little exploration beyond about 8 kilometres from the current plant site. And Kingfisher is a good example of this. It's a kilometre east of Sunbird. And, there it is.
Besides Kingfisher, what targets are you most excited about at Seguela?
Well, we've got a number of anomalies that we're chasing up now. We don't give them names, they just get a number. So they won't mean much to anybody. But there's 3 or 4 that we're still looking at now that are certainly encouraging. I'm also very encouraged by the Kingfisher corridor, because now we've got 3 deposits on the same contact. It's obeying the structural model that we've got very well, and all the area to the south, another 12, 15 kilometres, has never been properly drilled or assessed. So it opens up quite a huge area for us to the south. So there's nothing down there that has a name, but that would be an area I'll be very focused on.
Yaramoko, you had a good start to the year. 59,000 ounces produced, all-in sustaining cost at $1,382 per ounce. Should we expect a similar performance in the second half of this year, or could add some color to that?
Yes, Yaramoko is performing well. And let me remind your audience that when we acquired Roxgold back in mid-2021, Yaramoko was set for closure in 2023. And rather than close in 2023, it had a superb year. 2024 is looking very strong, and we're looking to also 2025 is looking like a strong year based on the resources and reserves we have in front of us. All of this on the back of exploration success at Zone 55 Deep. So we have had another year of success with exploration. We have managed to extend mineralization along strike, particularly to the west on the deep end of the mine. What does that mean? Is that this year we're going to incur in some more investment to extend or mine development to make these new zones available for production in 2025. So those additional developments were not budgeted in 2024, as we had no knowledge of these new zones, because these are recent discoveries. So you should expect to see some higher Capex in the second half of the year at the Yaramoko mine, which will enable us to access, develop, and produce from these new extensions in 2025. But the mine, in terms of production, in terms of expectations, is tracking well. We just have this pleasant surprise of additional ounces through discovery that require, of course, there's no free lunch, additional mine development that will take place in the second half of this year.
Yaramoko, do you have any update on the drilling process at Yaramoko and its meaning for the life of mine?
Nothing to report. We haven't released anything yet. We've got a rig there turning, doing some scout drilling. We've had it doing some stuff near the surface, as well as doing some deeper holes for western extensions to the main Zone 55 mineralization. So that's very much a work in progress at the moment.
When do you think you will have results or any update on the drilling at Yaramoko?
It's an ongoing basis. Every week we get a few more results in. But while the rig keeps drilling, we'll obviously keep getting results. So it's a bit hard to say. The schedule at the moment would call for towards the end of September, beginning of October for the drilling to finish. It's usually 3 to 4 weeks after that we get the assays back.
By the way, those assays, do you think you will release them as a large, batch or large exploration update, or do you think you will keep them?
We have a track record of releasing results fairly frequently. About every 3 or 4 months we'll do an update. And I would expect we'll probably keep the same cadence. We'll keep moving ahead with the same process.
So then, Diamba Sud, a year and a few months have now passed since you acquired it. Has the acquisition so far played out the way you expected?
We're quite excited and more reaffirmed that we have a property that sits at the core of one of the most exciting and productive belts in West Africa. The Senegalese-Mali Shear Zone, which on the Malian side hosts world-class deposits like Lulo Gunkoto and Fekola in the hands of Barrick and B2Gold. Well, we are across a geopolitical line, which is the borderline, in the same similar geology, right? So our drilling has had two purposes, two objectives. One is confirm the existing resources. Remember that we acquired about 850,000 ounces of gold from Chesser, right? And we did not incorporate those ounces into our consolidated resources. We placed them in a separate bucket and treated it as a historic resource. Why? Because we did not want to take full ownership of those ounces or incorporate them better into our inventory until we did proper further drilling and enhance our geologic knowledge of the ore body, prepare a robust geologic model that could support the resource estimation. That is very important in this business, no? And sometimes, many times, unfortunately, not done properly, or that work is underestimated. We go straight into producing a geologic resource without a sound geologic model. So a lot of our work, a lot of the drilling we've done is helping us build a robust geologic model that will support a robust resource. We expect to publish that resource towards the end of the year. Our drilling has focused on existing areas, infilling, helping us gain more geologic knowledge, and also looking to expand mineralization in new areas like Western Splay, for example, where we have had a lot of interesting drill hits. We're trying to put together there also a geologic model that supports a new geologic resource, incorporate those ounces into the inventory. So, but that is work that needs to take place. We aim to produce our first resource estimation that we can call our own in the before the end of this year, right? So we're encouraged. As I said, we want to see 1 million ounces plus in this deposit before we make a construction decision. And I think we're tracking that way, but I need to see the resource, right? And we need to wait a bit for that. But we're working on it.
And so, Diamba Sud, Area A, D, and Karakara, are these the pits with existing resources, or didn't have a fourth pit?
Yeah, no, those pits were what supported the Chesser PFS. And what we've done is we've gone back over those pits and done some confirmatory drilling and some additional geotech, metallurgical work, etc., to get them into a mine plan and bring them through to potentially a feasibility study. So that was part of the focus early this year, late last year, early this year. The other part of the focus is take the knowledge that's there and extend out further to define new deposits. And that's an ongoing process. And I think we've been successful. Western Splay is looking fairly attractive right now. We're still getting results back from there. Another batch came in this afternoon. So, yeah, it's a process where we're just going to keep growing that footprint.
Your advanced targets, Kazaku, Western Splay, etc., do these targets have the same potential in terms of resource quality size plus grade as your existing deposits?
I think so. I mean, you always get a bit of natural variability there, but certainly what we've seen to date, they'd be similar to what we see at Area A, Area D.
So would you say that have you meaningfully expanded resources of the 3 existing pits, or have you more confirmed the drilling that Chester did?
There's a combination of both there. We haven't got the final numbers yet. The guys are still working through updating the models. The drilling that we have completed has shown the mineralisation is generally where we expected it to be. We've tightened up on the drill spacing, so there's a higher degree of confidence in what's coming through. Plus, what we've seen is, certainly around the margins of the pits, we've extended mineralisation beyond the historic pit shells. So I'd be expecting those to contribute some additional ounces. And then, areas like Western Splay are relatively new. They don't have an existing resource on them. So they'll be adding into that mixture as well.
Could you remind everyone, what's the average grade of your 3 pits or existing deposits?
Around about the 1.5 mark.
Your advanced targets, they approximately show the same kind of grades? Or?
Yeah, everything's very consistent so far.
What has your scout drilling so far shown you?
Well, we keep getting mineralisation, that's for sure. The scout drilling's been primarily focused on testing the anomalies that are in the district around Area A, Area D. And we've been consistently finding mineralisation. It's been really, really encouraging.
And so when will you be able to restart the drilling program following the wet season, which we're currently in?
Yeah, we're looking at the end of September, give or take a week or so. Normally you can start up about then, it's just provided the ground isn't too wet. And the other thing that we need to take into consideration is just being careful where the farmers have got their crops and not inadvertently, drilling in the middle of a field that's covered in crops. So we'll reschedule some of the drilling to accommodate local landholder needs. And once they've harvested November, December, then we can come back over and drill on top of them.
So then, Lindero, you had a short maintenance shutdown and also lower mechanical availability of some front-end loaders. Has that been resolved, and should we expect stronger production, say 25,000 ounces at least in Q3 and Q4?
Yes, we contended with 2 issues at the mine in the second quarter. As you mentioned, low availability of loaders. That issue has been addressed and resolved. I was at the mine last week, and our loaders availability is up. Second, we scheduled a corrective maintenance shutdown, and it took 2-3 days longer than we originally anticipated and required a bit more expense on some spares and repairs. But again, that is behind us. The big heavy project at this one mine is the leach pad expansion that I mentioned at the beginning of our conversation. The leach pad expansion will allow us to place reserves that we have in inventory over the next decade on a leach pad for processing. And it's a heavy project, $42 million this year alone. And once done, it will serve the mine for a decade, but it's money that needs to be spent in 1 year. So our all-in sustaining cost at this mine looks heavy because of that. The weight of that leach pad expansion in our all-in sustaining cost this year is about $400. That project alone, right? So that project is scheduled to be complete in September, October. We should be placing ore in the leach pad. So the bulk of our investment in the expansion is done in the fourth quarter. And with that, the AISC of the mine should revert back to more normal levels. We estimated around $1,500 per ounce.
And so, Juan Jose, could you explain the 3 different pathways that there are for that mine?
Yes. We are exhausting the reserve estimate we did at the end of 2023, right? So we are exhausting those reserves probably by January of 2025. December 2024, January 2025, we'll be exhausting those reserves. But that does not mean that the mine has run out of resources. There is about, around 20 million ounces in resources that we couldn't convert to reserves due to several considerations. For example, exchange rate at the time or cost structure, right? So our team has been doing iterations, and also we've been doing exploration throughout the year. And based on all of these outcomes from the different cost iterations that we've been doing, optimizations that we've been trying to achieve, based on the outcome of our exploration programs, based on external factors like exchange rate. When we did our numbers last year for reserves, we used 16 pesos to the dollar in the exchange rate. Today it's closer to 19.20 pesos to the dollar, which helps us, as 50% of our costs are in local currency. So, we are doing all of those iterations, and there can be three outcomes. One is we can continue mining at some rate, a portion of the existing resources that we have. Second is we decide to not continue with more mining, but place the mine on care and maintenance while we continue doing some exploration work or some of these cost iterations. And last, we trigger a mine closure plan. That would mean, condemning the mine, closing the tailings facility. But which path we take relies on our assessment of the resources we have and the outcomes of our exploration this year. And all of that is taking place in the third quarter as we speak. So I expect that by the end of this quarter, September, early October, we should be in a position to know and call which of the three avenues will be taken. Right?
Do you have any path that you think is most likely or more likely than the others?
If I knew, I should make it public to everybody. And that's what I intend to do. But, we have had a reasonable exploration success at the Yessi vein. So we're hopeful Yessi can provide some support for continued mining. And again, we are doing the iterations, as I said, Jasper. And I don't want to put the carriage in front of the horses here. So let us finish our work and then call what the avenue will be. But anyhow, what's important here is that at the end of the day, the mine, it's coming to the end of its producing days. Might be end of the year or sometime next. But all of the analysts are assigning either zero or very minimal value in their NAV assessments to this one asset. So if we manage to continue producing at some rate, I don't see today anything that changed the big picture for the mine, today at least. That I can say.
And most of the drilling at the Yessi vein is done. Do you think that this is a forward-looking question, by the way, do you think that you have enough resources there to not have to close down the mine at the end of the year, or say, first, very early 2025?
Yeah, look, that's a question for the mine planning guys. I haven't seen the results of that yet, so it's not something I can make a comment on, to be honest.
Well, I appreciate the honesty. As a final question, would you like to give us an update on your Greenfield exploration work on your other projects?
Yeah. I've just come back Friday from a run through Latin America with the senior exploration team plus Jorge. Really good visit. Went to all the properties. Cecilia, the joint venture, we've got Riverside's coming along nicely up in northern Mexico. That's looking quite interesting. So we'll be, once the heat of summer has passed, the guys will be back out in the field shortly to carry on with the field work, the mapping and the sampling there. We're looking at another handful of properties in Mexico. They're all fairly early stages, but we've got some good insight into what they look like. And so we'll be looking to sign and announce additional deals over the next 3 or 4 months in Mexico. We're still very much wanting to grow our Mexican footprint. And we're seeing an opportunity here in the earlier stage projects to take a foothold in some of those. Down in Argentina, the team there is looking very hard at new opportunities in the greater district. That's just a matter of time. And over in West Africa, it's very much focused on Seguela and Diamba Sud. But aside from that, we're looking at several opportunities. We're at Tongan North, where we've just finished first pass auger and RC drilling. We'll be expecting those results in the next 2 or 3 weeks. We want to get a quick program in before the rainy season. And we'll take the rigs back up there in the end of September, beginning of October, to do a proper field work. So we really want to get ahead of target generation before the rains hit. We've done that. Now we're just going through analysing that at the moment. So, yeah, all in all, and at Yaramoko, there's drilling underway on the Zone 55 extensions, as well as the Tango Gate area. So, yeah, the generative side of it's been pretty busy for the last couple of months.
What would you like to have accomplished in 12 months at Fortuna?
We have some big levers for growth in the portfolio, and those are clearly identified for us. So one is continue capturing opportunities at Seguela. Seguela is not only offering us short-term opportunities on the size of throughput. The mine was built with a nameplate capacity of 154 dry metric tons per hour. And we're currently doing about 220. And we believe we can push to 240, right? So that's almost close to a 50% increase in throughput capacity. So we're excited about that. That's short-term opportunities that we have. And more medium-term opportunities, as you can see, there is nothing that creates value, and Jasper, in this business as a discovery. And I just outlined to you Sandberg. We've been, since 2021, telling the market that one of the big things that excites management at Fortuna about the Roxgold acquisition was exploration potential of Seguela. And we've been capturing that. We came with the discovery of Sandberg. Then we have followed with the discovery of Kingfisher. I need a bit of time because you'll say, well, you have a few drill holes on Kingfisher. We have about 14,000 meters of drilling, if memory doesn't fail me right now, on Kingfisher. But by year end, we'll publish our first resource estimation for Kingfisher. And that'll help the market, the analysts, better grasp what is it that we're talking about. But I can advance to you that we're very excited. I was at the mine about a month and a half ago, and we decided to continue drilling nonstop until the end of the year. And we have plenty of opportunities, not only at Kingfisher, but in the 35-kilometer long property that we control. Another big opportunity is Diamba, right? We see Diamba as our next development project. There are still some milestones we need to achieve. I already spoke to them. I need to see the first resource estimation come by year end. But parallel to the work we're doing on the geology side, we're advancing with engineering work. So it doesn't become a bottleneck if we decide to streamline and fast track Diamba Sud to production. We are advancing with environmental studies, biodiversity studies, hydrologic work, geotechnical work. All of that work is well advanced. So if we decide to advance the project, we should be in a position to complete our resource estimation by year end and produce our PEA in the first quarter of 2025. And with that, make an assessment. We are hopeful that the work will be supportive of a fast-track approach to that development, right? But there are still milestones we need to achieve. So all of the things that we've been saying we're achieving, we just need time, no? And I'm not going to over-promote, Seguela or over-promote Diamba. Watch us as we deliver, no? That's what I'm asking. Watch how we deliver, because that's the way to do it, methodically, step by step, without shortcuts, right? That leads to mistakes and failures. So, yeah, watch how we deliver at Seguela, at Diamba Sud. Right now, those are the big levers for opportunities. And then also, for example, as we end with the large capital, the sustaining capital demands in Lindero, that mine should revert back to a healthy free cash flow, right?